Good morning. I am calling to order this meeting of the Tax Conference Committee on House File 1938 for Saturday, May 20th, 2023. We have a busy morning ahead of us. It's great to see everybody. We're going to start, what we'll do today is we'll pass it over to the administration to walk through a child tax credit poverty reduction memo. We will go over changes that have been made to the spreadsheet since the last time that we met, and we will adopt the language of our conference committee report. So to begin with, I'm going to pass it over to Commissioner Marquardt for the walkthrough of the child tax credit poverty reduction memo. There should be copies available to the public back in the document section. Commissioner Marquardt.
Thank you very much, Madam Chair. My name is Paul Marquardt, Commissioner, Department of Revenue. Thank you, members. And before I go over the report, I'd like to give a little background of how we got there. Back on January 2nd, at the inauguration of Governor Walz and Lieutenant Governor Flanagan, they laid out a very bold vision for the state of Minnesota, and that was to make Minnesota the best state in the nation for kids and family. And with that, to completely eliminate child poverty. And so working with advocates, Governor Walz, Lieutenant Governor Flanagan proposed to the legislature a nation-leading child tax credit. And on behalf of the governor and lieutenant governor, I want to thank the House and Chair Gomez for taking a framework that was championed and created 25 years ago by then House Tax Chair Senator Rest, the Working Family Credit, and taking that and working so hard to make sure how you could reduce child poverty the best. And so a huge thank you. And what came out of those efforts was a sharing, was matching the governor's vision on a nation-leading child tax credit. And what we have is the Minnesota Child Tax Credit. And what that does, it will provide a child credit of up to $1,750 per child, unlimited. This is nation leading. I think there's about a dozen states right now that have a child tax credit, not even close to this one. This will provide child tax credits for about 265,000 families. This is going to be transformational. This is going to create stability in families' life. This is going to lift up families out of poverty. This was just a tremendous effort. And the best part about it came yesterday in this report. The best part about it is that it reduces child poverty, this Minnesota Child Tax Credit, by 33.3%. So the Center on Poverty and Social Policy at Columbia University in New York analyzes these type of things. And this is before you right now, members, and you can look at that, and kind of the main part is right in the middle of that sheet. And it looks at the percent difference that this Minnesota Child Tax Credit will produce in child poverty. It reduces child poverty in the state of Minnesota by a third. And studies after studies after studies show that when you reduce child poverty, you increase educational achievement, you provide for a more productive workforce, which leads to a stronger economy. It lowers healthcare costs. It is a winner all the way around for every corner of this state. So this Minnesota Child Tax Credit is nation leading, will provide a child tax credit of up to $1,750 per child, and it will reduce child poverty by a third. That's amazing and great work. It shows that when the governor and the House and the Senate and advocates work together, you can do some really amazing things. And what we have all done here is all shared and realized the governor and lieutenant governor's goal of making Minnesota the best state in the nation for kids and families. And with that, to take a huge step in eliminating child poverty. So, Madam Chair, thank you for this opportunity. Thank you for your great work. Thank you, everyone, for making this dream come true.
Thank you so much, Commissioner. It's really exciting news, and I know that I can speak for both chairs and say that we're proud to be the governor and lieutenant governor's partners on this important effort. All right, next up, we walked through the spreadsheet at our last meeting on Wednesday, but as the chair stipulated, we knew it would change at least somewhat. So at this point, we're going to have House and Senate Fiscal come up and walk through the updates that have been made to the spreadsheet since our last meeting on Wednesday. Welcome. Please just introduce yourselves and go ahead whenever you're settled.
Madam Chair and members, Casey Mum, Senate Fiscal Analyst. This will be very brief and high level. There were not many changes to the spreadsheet. Most of them were technical or to correct amounts that slightly differed from revenue estimates. But the summary page here shows the cumulative effect of everything. And I'd focus your attention particularly on lines 12 through 14, showing the total impact of the bill. As you can see on the first line 13, there's a cumulative effect of $3 billion in fiscal 23 through fiscal 25. And if you go back up to line 12, there's a $1.3 billion change, cumulative change from tax policy in fiscal 26 and 27. The second line 13 shows how this interacts with the changes that are made with the stadium reserve. So there's a net savings from repealing the stadium reserve and those provisions in the bill. I'll turn it over from here.
Madam Chair and members, Kathy Schill, House Fiscal Analysis. I'll do it one step back to line 8. This is spending for property tax aids, credits, and refunds. Those lines look very different than what you saw in the 517-6 o'clock version of what we presented. And this is mostly because of accounting changes. The big one for 24-25 is moving certain appropriations from tax policy to the aids and credits side of the spreadsheet. In 26 and 27, we're accounting for the repeal of the renter's credit PTR, and it looks very different. So if anyone is trying to reconcile from this sheet to this sheet, there's a lot of detail to go through to explain those changes. And we will note that, once again, on the summary page, non-general fund change items, only slight changes in lines 22 through 24. But the bedrock is on the following pages.
Madam Chair, Cynthia Templin, House Fiscal Staff. Turning the page to the tax revenue side of the spreadsheet, I will just, on this page, highlight the provisions that have a changed estimate relative to the presentation of the spreadsheet that we covered a few days ago. On line 23 of the spreadsheet, the direct payment advanced refundable credit, the estimate in fiscal 24 has changed to reflect just the amount of the actual refundable credit. It is $1,130,900,000. Lines 25 through 28 reflect the child tax credit provisions. The estimate that is contained in the spreadsheet is slightly different relative to the presentation of the spreadsheet from a few days ago. The estimate was changed to show a slower phase out for individuals with older children, so the estimate has slightly increased. Moving down the spreadsheet, The film production credit, that is on line 39. That is a sunsetted provision, and it is reflected in the effective dates. The same with line 40. That is a sunsetted provision, and that is also reflected in that column. And turning the page, line 44 of the spreadsheet on page 3, the short line, railroad modernization tax credit, that is also a sunsetted tax credit from tax year 23 to tax year 30. I'll turn to my colleague, Mr. Munn.
Okay. In the corporate franchise tax section, please note on line 58, the inclusion of a sunset for the historic rehabilitation tax credit. Moving on to the sales and use tax section, a few of these were adjusted slightly to reflect the revenue estimates prepared for these provisions. On line 72, there is a new exemption added. It's the exemption for suite licenses. This was not on the previous spreadsheet that the conference committee viewed. I believe that is it for sales and use tax.
And Madam Chair, I think the final change on the tax policy revenue side is in the other tax and non-tax revenue section. In the previous versions of the spreadsheet, there is a dedication to the Housing Development Fund from the mortgage and deed taxes. And in the conference committee report, rather than a dedication from that tax, there is an appropriation to the Housing Development Fund, and that is contained, that line item expenditure is contained on the other side of the spreadsheet.
Members, Kathy Schill, moving down to pages 5 through 8, we have tax aids and credits. Once again, just the changes. I will note lines 12 through 15. This is additional one-time PTR payment for both homeowners and for renters. This was one item that we used to help balance the spreadsheet. What was reported when we came to you last time was an additional one-time 20% payment. It is now 20.6%. So those numbers on those lines have changed slightly. Lines 20 and 21, there was some double counting going on here. It's just a difference between how the Senate item on line 21 was tracked, and so we adjusted the line to reflect counting for community land trust property interactions correctly. On page 6, I'll point to lines 33 and 34, interactions for both the LGA and CPA increase were being calculated at the time we did the other spreadsheet. They are accounted for here. Line 39, this is an impact that was not previously recorded on the spreadsheet when we earmarked 12% of the current local homeless prevention aid, earmarked that for tribal governments. There ends up being an interaction, and now we are carrying it here. Line 52 is the local government aid prepay line that has been adjusted, now at $60.586 million. Moving to page 7, in the other changes section, beginning on line 87, as Ms. Templin mentioned, the Housing Development Fund Workforce and Affordable Home Ownership Account is now on this side of the spreadsheet, $40 million impact one time in fiscal '24. And the last two items on the sheet is line 96. There was an adjustment for the pension, school pension adjustment aid. We added St. Paul TRFA to this line, which created, which was an additional cost. So the impact in the tails now reflects $101.93 million. And finally, on line 97, Department of Revenue Administration for the refundable credit that Ms. Templin pointed out, there's an impact in both fiscal '23 and '24 that we are now tracking here. And those changes account for the total on line 101. And if, for your information, if you're interested in tracking the impact of the repeal of the renter's credit, you'll find that summary on page 8 on line 109. Other changes, I think I'll turn to my colleague, Mr. Mumm.
Madam Chair, on page 9, these are non-general fund changes. The only adjustments here were very slight changes to some of the sales tax exemption amounts impacting the legacy funds. And if you skip ahead to page 11, there were no fiscal changes to the stadium reserve provisions, even though this was not displayed on the previous spreadsheet that the conference committee reviewed.
Yeah, and that concludes the presentation of the spreadsheet changes.
Great. Thank you so much to our fiscal staff. Are there any questions before we let them go back? Chair Rest.
Thank you, Madam Chair. Line 10 on page 11. Could you explain that change? Is that not, there's not going to be at one-time appropriation for the security limits? Or is it
Mr. Mumm.
covered somewhere else?
Yep.
you,
Madam
Madam
Chair, we apologize. There should be a column here labeled fiscal year '23. It was inadvertently omitted when we printed this document. The appropriation is in the bill. It is $15.7 million. It's a very unfortunate omission, and we apologize for that.
Thank you, Mr. Mumm. Chair Rest.
Thank you for clarifying that. It kind of took my breath away a bit there, so appreciate it.
Representative Davids.
Thank you, Madam Chair. I've got a question on the stadium language. Is that the same language that the Senate had, or has been changed? Is the reserve closed, and how does that show up on the spreadsheet?
Ms. Templin or Mr. Mumm?
Madam Chair, Representative Davids, it is largely the same as the language that was carried in the Senate bill. There is a change to the amount of sales tax revenue that is being retained that would otherwise go to Minneapolis. There's a calculation in statute that calculates the annual increase in that, and the change being made here is that that is limited to a 3% annual growth amount. But because the forecasted growth is below 3% anyway, it is not counted as a fiscal effect here. Otherwise, the stadium repeal provisions are identical to what was in the Senate's bill.
Representative Davids.
Thank you, Madam Chair. So I guess is the reserve closed, or is that still open?
Mr. Mumm or Ms. Templin, either one.
Madam Chair, Representative Davids, yes, the conference committee report does reflect the repeal of the reserve, so which is identical to what the Senate position was. And so the savings from the stadium reserve are reflected in the bottom line total of the conference committee report.
Okay, thank you, Madam Chair.
Good. Senator Weber.
Thank you, Madam Chair. I'd like to turn to lines 61 and 62 of the sheets there. As it relates to the project in Minneapolis, I see there's a total of $10 million being granted to the city of Minneapolis. One is for a specific purchase, purchase of a specific property. And my question is, you know, a little more information as to what that property is. And then I have a further question concerning the $8 million also.
Yeah, thank you, Senator Weber. I'll take that one. So the $2 million, which is actually, it says on here, Hiawatha Campus holding costs, and it should say, you know, for the purchase of these parcels that the city currently owns. So there, it's a little bit complicated, but I'll try to give you a rundown of it. So the city of Minneapolis has for many years intended to expand its water distribution functions. The site where the water distribution functions are currently owned is like this barn-looking thing from the early 20th century, apparently, when we used horses to deliver such things. So there's like literally like a stable there. So there is a need to move the water distribution functions somewhere other than where it's currently located. There is a public works facility currently that's located in the Phillips neighborhood in South Minneapolis. There was a privately held property that's adjacent to this current public works facility that the city decided that they wanted to purchase to move the water distribution functions that are currently at the stable site there. This parcel it's industrial land. It's located at the intersection of the Midtown Greenway and the light rail, the Green Line, which represents billions of dollars of public investment in public infrastructure. It is also part of a little area of land that is, again, it's industrial. There are two, you know, there's a foundry and an asphalt plant that are right there that have been there. The foundry's been there for 150 years. It's grandfathered in. It would not be located in that area today if it came through. Because if you go, there is a, you know, between this asphalt plant, which you can smell when you drive down Cedar Avenue in the summer, and there's a one piece of corrugated metal that separates it from an apartment building where there's literally children's playground equipment out back. The Phillips neighborhood is one of two places. Representative Agbadje's district is the other, where, you know, that's an asthma, kind of a concentrated area of where there are the most hospitalizations for childhood asthma of anywhere in the state of Minnesota. It is an area that it has, I'll just keep talking about the Phillips neighborhood because that's what I know the most about, where this property is located. It's a residential arsenic superfund site because there was a pesticide plant there where they were just throwing the arsenic out back in this pool for many years. At that intersection, there is a lead smelter, so there's lead contamination there. There's also old, outdated housing there. So in addition to being a cluster of childhood asthma, it's also a cluster of elevated blood lead levels for children. It is a low-income community. It is adjacent to the Little Earth of United Tribes housing complex, which is an all HUD Section 8 housing complex. Again, if you look at the asthma rates just in that area, they're very high. So the city's proposal to take what was a private, it's basically like a big warehouse, and it has kind of a big parking lot in front of it. And so the city's plan to turn that into a public works facility, a water distribution facility, which would necessitate putting a huge parking garage there and a lot of car and truck traffic in and out. This is right on the corner of Hiawatha Avenue, which is, you know, a kind of a busy highway. The community has major objections to it because it really would cement the industrial nature of this corner where there has been literally billions of dollars of public investment in transit between the Greenway and the light rail. So it's a place where there could be something else, where we could do transit-oriented development, where there could be something that doesn't further pollute this neighborhood, which is already overburdened, and whose children are already overburdened, and you can see that in the health endpoints. And so there's been, it's been a process that's unfolded over a number of years of the city kind of being dug into its position of no, we purchased this land and we're going to use it for the thing that we want to use it, and the neighborhood, the surrounding community coming together and saying this doesn't align with our vision for what we want our community to look like. And so what this is, and so the state has been, our Minneapolis delegation has been kind of drawn into this in various ways. And we, brought together, for many years, the city has said, we're not going to sell this land to the community. It doesn't matter how much money you come up with, it's not going to happen. We need this for our water distribution facilities, despite, the kind of overburden, despite the health endpoints of the children in the community, despite the kind of inappropriateness from a land use perspective of cementing industrial uses adjacent to, to residential properties where children live and try to play out back. So this is part of what the state is doing to step in to help solve this difficult kind of conflict, I'm just going to say, between, the city government and the surrounding community that has organized themselves. And so this is to help, because the city's water fund has spent money to acquire the property, there's holding costs associated with holding onto the property. They, like I mentioned about the residential arsenic superfund site and the lead smelter and the sort of legacy of point source solution right on that, or point source pollution right on that corner. This is to help to offset some of those costs in that financial kind of deal that's happening between this community group and the city. I'm sorry for so much talking, but it's the context of this is important to me. It's important to our community. So, yes.
Madam Chair, in other words, the city is going to be reimbursed for the money that they have into that, and then the development will not occur there. Is that what you're saying?
Yeah. So the plan is that the city has agreed to sell the land to this community group and to abandon to find another place to locate the water distribution facilities that we need to find a new home for. And so this is to help kind of offset the cost of that transaction to the community.
Okay. Then regarding the $8 million to the city of Minneapolis for the purposes of hiring a foundation to consulting activities, et cetera. Now, the city of Minneapolis obviously has an economic development department, or maybe call it something different, but, and certainly deal with experts in that field all the time. My question is, why are we specifically requiring them to go to a foundation? Is this a specific foundation in order to provide those services?
Yeah, thank you, Senator Weber. So it's really not about consulting. Just obviously for context, this is the Lake Street corridor, which along with with West Broadway in North Minneapolis, University Avenue in St. Paul, and other I'll say other commercial corridors in Minneapolis, including Cedar, the West Bank, and 38th Street, experienced major financial impacts from the civil unrest after the Minneapolis Police Department murdered George Floyd on 38th in Chicago. At that time, we were in a divided government. And, I will just say that during my time here, when there is a disaster in a part of the state steps up because we rise and fall together. If there is something terrible happening in a community in Minnesota, that requires an emergency response, this legislature generally answers that call. We did not answer that call in the summer of 2020 for a lot of different reasons, and I'm not going to impugn anyone's motives by saying what I think those reasons are. But I will say that there were billions of dollars of damage between these commercial corridors, and the state did not step up in a way that was commensurate with the damage that happened in our core cities, which, as Representative Listagard likes to point out, is responsible for 70% of the revenue generated in the state of Minnesota happens right in the metro area. So this is, this year, we are trying after the fact, years later, as our businesses have our small businesses. This is like Main Street in my community, Lake Street is in South Minneapolis. So we're looking to answer that call. It's not for consulting fees, it's for support to small businesses. It's for, we have this commercial corridor needs, sort of like general marketing help, PR help, beautification efforts. And so there are organizations that are on the ground delivering these services today to the small businesses that need the help, that continue to need the help. And so the idea with getting it to an organization that's physically located on the corridor and that's involved in the day-to-day provision of these services to the businesses is why it's not going through the city's community planning and economic development department. I mean, it goes to them, and then the expectation is that they get it to this organization that's right on the corridor and that's involved in the day-to-day activities. I will say that, in the past, when the legislature has appropriated money for the purposes of recovering from the civil unrest that happened after George Floyd's murder, that, a lot of that money went from deed to the Minneapolis Foundation, for example. And so it's not unusual or doesn't violate any protocol that I'm aware of for that to be the way that this money gets out to those small businesses. So they're like on the front lines doing this day to day, and so that was who we thought was the entity that was most able to respond to the needs of the businesses on East Lake Street.
Well, thank you, Madam Chair. And I just simply wish to say that I was in the legislature at the time of the civil unrest. And I come from, 240 miles away from St. Paul, and people have asked, well, have we paid money for the damage that occurred there? And I said, well, at the end of the day, I said, I'll just tell you up front, as a legislator, I would expect at some point I will be asked to support provisions that deal with a catastrophe, which is really what it was, just like many other catastrophes that happen around the state in various purposes. And I said, and I will have no problem in doing that. To me, that's what One Minnesota is about, not necessarily some of the politics that gets generated around that phrase. But I just thought it was unusual for us to say, with a community that has a community development, economic development department, that we specify who gets the money for the purposes of providing that type of consultation. So that's why I asked the question.
Thank you. I appreciate that, Senator Weber, and I think that we're, as we have said, I guess, as the Minneapolis legislators all along, is like, when you experience a crisis in your community, like, we're there to step up for your residents because it matters to us deeply that, all people in Minnesota have access to what they need for a good life, and I really appreciate you expressing that sentiment back to us about our communities.
You're most welcome. And I assume this grant, like all the other grants, will be subject to the review that we have talked about in that respect.
Absolutely, and Senator Rest actually made a slight change just to ensure that there was no kind of gap between the this money getting out the door and the implementation of the larger grant process to make sure that whatever the implementation date is of the grant
is
review legislature or legislation that's in, I believe it's going to be carried in state gov, that this will be subject to that from the time that it goes out. So
Thank you, Madam Chair.
thank you, Senator Weber. Yeah, Chair Rest, anything else you wanted to add?
Thank you. Madam Chair, I just want to point out a minor thing, but it might be confusing, and that is line 5 on page 9 is a blank, but doesn't mean that that exemption went away. The exemption is actually covered in, at line 12. It's just a repeat of a line. It just needs to be, line 5 needs, that shows nothing, that shows a blank, just needs to be deleted, just so it doesn't confuse people who see nothing there and then don't look down further. Thank you, Madam Chair.
Thank you, Chair Rest. Is there any other discussion before we move on to going over the conference committee report? All right, not seeing any. Thank you so much to House and Senate fiscal staff. Thanks for all your excellent work. We appreciate you very much.
Madam Chair.
Yes, Chair Rest.
On occasion, spreadsheets themselves, in addition to the language in the conference committee report, is adopted, but I see no need for that here.
Okay, thank you. All right, so does House Research and Senate Council want to come up? I know we're going to be kind of doing some shuffling, and I'll just sort of turn it over to you guys, and you can do what makes most sense. So we're going to start at the beginning. Welcome.
Madam Chair, members, Nora Pollock, Nonpartisan Senate Counsel. Mr. Williams and I will go through a very high-level review of the income and corporate franchise taxes article. And I will start, and Mr. Williams will go through the second half. This article includes some changes to the beginning farmer credit and owner of agricultural assets credit. It increases the credit percentage and increases the maximum credit amount. There are also provisions for sales to certain family members. There are also some modifications to the credit allocation. And there's a modification to the report that's required for the credit, requiring some additional information about the number of beginning farmers with some additional race and ethnicity data. There's also a definition of emerging farmer that's added to the credit. Madam Chair, just as a matter of clarification, the sunset is extended on the beginning farmer and owner of agricultural assets credit. And the sunset would expire after tax year 2030. Madam Chair, moving on, there is an extension of the angel investment credit for $5 million for 2 years for tax years 23 and 24. There are some modifications to the film credit. First, some technical corrections regarding receipt and approval of verifications for expenditures that are eligible for the credit. There is also an expiration of the sunset through tax year 2030, and there's also an increase in the allocation amount for the credit. There are some changes to the PTE tax that have been discussed throughout the last few weeks of the conference committee. And there's a modification to the phase out of the standard and itemized deduction. This article also includes a modification to the subtraction for discharged student loans. A modification for the to the student loan subtraction, which would allow a subtraction for discharged student loans. And then finally, Madam Chair, there's a modification to the Social Security subtraction under current law. Taxpayers with adjusted gross income up to $100,000 would have their Social Security benefits excluded from taxable income. The subtraction would fully phase out for married joint filers at $140,000. And I believe Mr. Williams will continue with the second half of the article.
Chair Gomez and Chair Rest. So the bill additionally includes the subtraction for qualified retirement benefits. These are the basic pension plans. This language is the same as it was in the House and Senate bill. There's a subtraction for damages related to sexual harassment or abuse. This is the same as was included in the House language. There's a additional language in Section 30 relating to net investment income tax. This is a 1% net investment income tax on income on that tax base amounts of it in excess of $1 million. And there's an exclusion for agricultural homestead land. There's the provision that was carried in the Senate bill related to the political contribution refund, increasing the amounts of that refund. The second half of this article also has more changes related to the pass-through entity tax that was discussed sort of throughout the conference committee. It's effective for tax year 23, so it does not include retroactivity. There's additional changes to the film credit in the second half of the article with the intended effective date, as Ms. Pollack noted, of expiring after tax year 2030. Second half of the article also contains the language pertaining to the Minnesota child tax credit. The credit is it's taking the governor's position of establishing a separate credit. As Commissioner Marquardt noted, it's at $1,750. Phased out at $35,000 for married taxpayers filing joint and $29,500 for other filers. The second half of the article also includes the change to the dependent care credit, allowing the credit for newborn children for unmarried taxpayers under current law. That newborn credit is only allowed to married taxpayers. There's changes to the working family credit, sort of establishing a working family credit equal to 4% of the first $8,750 of earned income, and then an additional credit for older children that would cover children that currently receive the working family credit but don't receive the sort of young child credit being established in the governor's position. And also, this language in the working family credit also includes provisions expanding the working family credit to individuals who file their taxes with an individual taxpayer identification number. There is the Senate language related to the education credit, so that's increasing the phase-out of the education credit to $70,000, changing the income measure used for the education credit, and indexing the phase-out for inflation. There's the governor's provision related to the credit for military service, changing that to be effective for a calendar year basis. There's the credit, a new credit established for sales of manufactured home parks. The only change is the addition of a sunset after tax year 2030. Similarly, there's the short line credit that was carried in the Senate bill, with the only change being some technical changes to the credit language. And then additionally, there's a sunset added again after tax year 2030. I'm skipping over mostly technical provisions here. In section 45 of the bill is the language pertaining to the dividend received deduction. So that deduction is being reduced from 80 and 70%, depending on the amount of the corporation sending the dividend that's owned by the receiving corporation. So it's being reduced to 50 and 40% in the bill text. And then there's additionally in section 47 of the bill, language clarifying that Minnesota adopts the tax treatment of GILTI, and that GILTI income would be treated as dividend income under the bill. Section 49 of the bill is the language pertaining to the one-time payments, the rebate payments. They're at $260 per person, so $520 for a married couple, $260 for a single filer, and then $260 per dependent, up to a maximum additional amount of $780. The phase-outs on that are the same as they were in both bills at $150,000 for married couples and $75,000 for other filers. There's provisions at the end of this article reviving and reenacting the historic structure credit and the angel credit, which have lapsed. Then there's also the subtraction for unemployment compensation for those individuals that were involved in the court case and did not receive it when it was provided by the legislature for tax year 21. So that's maybe a high-level overview of the income article. Ms. Pollack is reminding me to note that the historic structure credit would sunset in the bill after July 1st, 2029. So that's consistent with the governor's position on this. So that's maybe a high-level overview. I'm happy to stop and answer any questions on the income article.
Senator Weber.
Excuse me. I've talked to a lot of people concerning a number of the provisions in here, and particularly GILTI, the global intangible low taxed income. I try to say that once in a while because people keep asking me what it means, you know. However, I think GILTI is probably an appropriate acronym, but I will get into that some other time. The question that I have, Madam Chair, basically, the U.S. Constitution imposes restrictions on how states can tax income earned overseas. And, you know, it seems to me we seem to be going further than the feds and other states who have GILTI have allowed for it. And the question that I have for either Ms. Pollack or Mr. Williams or the department probably is there language that includes factor representation so that we're including income but also including sales and foreign taxes paid to make sure that we are complying with the Constitution?
Thank you, Senator Weber. I'll go to Ms. Pollack or Mr. Williams.
Chair Gomez and Senator Weber, there is no factor relief or factor representation included in the bill text. However, the bill is taxing GILTI somewhat differently, so it's not just treating GILTI income the same way it's treating domestic income. It's instead taxing GILTI income as a dividend. And so it's providing GILTI income with that dividend received deduction that's allowed for other sort of intercompany dividends under current law. The bill is reducing the dividend received deduction amount for both domestic corporation dividends and also foreign GILTI income treated as a dividend, but sort of, I think in lieu of providing factor relief, the idea is that the bill is providing that dividend received deduction for GILTI income.
Well, Madam Chair, I would assume that if the companies feel that there's an unfairness there, we've included enough money for lawsuits that'll be filed.
I don't think nonpartisan staff will have an answer to that, but thank you, Senator Weber. Anything further? You're okay? Does anybody else have questions about these sections? Not seeing any, I'll turn it back over to you. Ms. Pollack, could you just move your mic a little closer to your mouth, please? Thank you so much.
Chair Gomez and members, Article 2 is the federal conformity article. This was previously adopted in committee. There's no changes in the report relative to what was adopted previously, and unless there's further questions, I'm not going to go into more detail on this.
I'm not seeing any, so I think we can move on. Thank you.
Madam Chair and members, Jared Swanson with House Research. Moving on to Article 3, which is the property tax article. Again, I'm going to stay at a pretty high level, but I'm happy to pause and take questions and go into more detail on anything. So some of the provisions in this article include an increase to the levy authority for watershed districts. There are property tax exemptions for a tribal-owned property in Minneapolis and for an elderly living facility in Duluth. The article would increase the first-tier valuation limit for agricultural homesteads. There's a reduction in the class rate for certain community land trust properties, and that class rate would be reduced down to 0.75%. And there's also a reduction in the class rate for 4D low-income rental properties, so that classification rate would be reduced to 0.25%. The article would allow individuals with ITINs or individual taxpayer identification numbers to qualify for homestead and for property tax refunds. And the maximum exclusion and the valuation thresholds within the homestead market value exclusion are increased under this article. There's a provision that would extend the application window for surviving spouses of disabled veterans and allow surviving spouses who had been receiving the disabled veterans homestead market value exclusion to reapply for the exclusion if they had that exclusion expire prior to 2020. There are also changes to the Senior Citizens Property Tax Deferral Program, which were in both the House and the Senate bills, and individual provision related to the Northwest Minnesota HRA and their levy authority. And finally, there's an additional provision that allows the Albany School District to be exempt on a property that it purchased after July 1st that resulted in that property being taxable. So there's an exemption established for 1 year for that property in the article. And Madam Chair, that concludes the overview of the property taxes article.
Thank you, Mr. Swanson. Are there any questions for Mr. Swanson before we move on to the next article? Oh, Senator Weber.
Thank you. I just want to make a comment here. It'll save comments away from my final speech.
Thank you.
I appreciate the property tax exemption increases that were allowed here. I believe we should have had the resort homestead, and I asked about that the other night, and everyone talked about the shifting of taxes. I want to mention that included in my bill, which raised these homestead exemptions, was also provision that took $35 million from the state general levy to do just that, offset the shifts that would occur. And I recognize that the state is really reluctant to give up any of its money. But I just want to know, and the public to know, that there was a way to offset that shift, and it actually was provided for, and I regret that it couldn't be included here. Thank you.
Thank you, Senator Weber. Are there any other comments or questions on this article? Or these articles? Maybe it was two. All right, we're good. Mr. Swanson.
Madam Chair and members, I'll move on to Article 4, which is the AIDS article. This article contains the updates to the LGA formula and also increases both the LGA and county program appropriations by $80 million each. There are the PIL changes that were in the House the House bill that increase PIL payments for certain types of PILT land, and it also establishes an inflation adjustment for natural resources PILT payments. The article establishes a variety of new state aid programs to local governments and to tribal nations, including a soil and water conservation district aid, an electric generation transition aid, statewide local housing aid, a tribal nation aid, a one-time public safety aid, and a 2-year 4D transition aid. There are also property tax refund related provisions within this article. So the article would reduce the homestead credit refund copay percentages, and there are one-time increases in the targeting property tax refund, in the homestead credit refund, and the renter's credit. And Madam Chair, that concludes the overview of the AIDS article.
Are there any questions on the property tax aids article? Not seeing any. Thank you, Mr. Swanson. Welcome, Ms. Hagler.
Good morning, Madam Chair and members. I'm going to do a high-level walkthrough of the sales and use article. Also, Alex Hagler from House Research. So a majority of these provisions have been seen in both either bill, so I'm not going to go into great detail, but the article creates new exemptions for nonprofit blood centers, amenities included with the privilege of admission, firearm storage units, and sales between sole member of an LLC and the disregarded entity. It expands exemptions for the suite license purchases for stadium and college level suites when bundled with admissions price, and also expands the exemption for county fair sales. And then on pages 152 to 164, there are a number of city-specific construction exemptions. And I won't go into great detail about that, but that's pretty much the sales tax article.
Thank you, Ms. Hagler. Are there any questions on the sales tax article? Not seeing any? Oh, sorry, Chair Russ, excuse me.
Not a question, but I think interested parties have been looking at the sunset dates and asking, how come this one is sunsetted and retroactively, and this one is not, and why are some in sales tax retroactive, or not, have no sunset, and then some in the income tax article. And I just, we are correcting those. There's still a couple more corrections to be made, but our general approach to that is that the sunset begins at the effective date of the provision, and if it's effective 2 years ago, then you get 8 years from that, from 2 years ago, not 8 years from June or July 1 of 2023. And we've tried to be consistent throughout with regard to that, although some are not being, subject to the sunset, and then that remains a policy, that's a policy decision when we don't do that. So, and I really appreciate the work of the Senate Council and Fiscal, and really going back and checking those dates so that we have a consistent sunset date, and if there's not one there, there's a policy reason for it. So that's the answer if you're wondering about your provision that has a sunset in it, even that you did not anticipate. Thank you.
Thank you for that clarification, Madam Chair. Thanks, Ms. Hagler. I think we're ready to move on to Mr. Sylvia, right? Welcome.
Madam Chair, members, Eric Sawyer from Senate Council. The next article is Article 6, Minerals Article. This language is identical to the language that was adopted by the committee last week as amended, with just one change, and that change relates to the section that imposes a minimum payment for purposes of the gross proceeds tax. This change would provide one additional instance in when that minimum payment would not apply, and that is when the mine is in the process of closure, and the Commissioner of DNR determines that the person will no longer engage in mining at the mine. Other than that, Madam Chair, members, the minerals article is the same as was adopted last week by the committee.
Thank you, Mr. Sylvia. Are there any questions or comments on the minerals article? Not seeing any? Thank you. I think we can go to the next one. That's you, Mr. Williams, right?
Chair Gomez and members, the next article is the renter's credit article. This is largely the same as it was presented to the committee previously, but there's a couple minor changes that I wanted to highlight. There was language in the House position originally that required the Department of Revenue to establish sort of a separate simplified filing process for people that don't have a filing requirement, and that language has been removed from the renter's credit article in the conference committee report. And then there was tax credit outreach grants that go to Vita sites and other organizations to sort of promote and raise public awareness about the changes to the credit. And the amount of the appropriation for those grants has been dropped to $1 million per year. And other than that, the renter's credit article is identical to how it was presented in committee previously. And happy to answer any questions.
Thank you. Chair Rest.
Thank you, Madam Chair. What was the reasoning for dropping that requirement or language with regard to those that are not required to file?
Mr. Williams?
What's the effect of that?
Chair Gomez and Senator Rest, sort of the effect of it is that they wouldn't sort of, I think the idea was maybe there might be like a separate M1 form just for people that are sort of don't have that federal or that state filing requirement. And so that form would not be created. And we sort of received in the House some technical feedback from the department and also from sort of advocates that are involved in the tax, sort of volunteer tax preparation area, that might sort of add complication and sort of not improve the filing process at all. So that was the determination that the House made to remove it.
So, Madam Chair, so
Yeah,
instead
Chair.
of being simplifying, it would have complicated.
Chair Gomez and Senator Rest, that's right.
Okay, I think that there are folks here that are engaged in that work as volunteers, and I think that's a very important thing to point out, and appreciate it.
Thank you. Any further questions? Looks like we're good to move on to the next article.
Madam Chair, members, I will be going through the next two articles, which both relate to tax increment financing. Article 8 is the article that contains the city-specific TIF proposals, and I will not, go through the details, but I will just name the cities and what language was adopted and if there were any changes. Relating to the city of Hopkins, it was the Senate language, no change. City of Bloomington was the Senate language, no change. Cities of St. Paul and Savage were House proposals, no change. The city of Chatfield was the Senate proposal, no change. The city of Duluth had two proposals. The first, which modified 2019 enactment, was the Senate language, no change. The second related to the Essentia TIF district. This was the Senate language. There was one change made to require that the city create a TIF plan to establish a TIF district by December 2030. The city of Ramsey was the Senate's language, no change. Likewise for Fridley, Plymouth, and Shakopee, those were from the Senate with no changes. The city of West St. Paul's TIF authority was the Senate language, and likewise, there was one change here where the language was amended to require that the city of West St. Paul establish a plan to establish a TIF district pursuant to that special legislation by December of 2030, the same language that was added to the Duluth TIF authorization. The city of Woodbury's TIF was the House language, no change. And lastly, the general law change concerning the definition of a small city was the Senate's language, no change was made to that.
Chair Rest.
Thank you. I really appreciate the limitation that we're placing on, once you get special legislation, you just can't let it stay there forever, and that there is in effect, a sunset on the authority. And if you don't have it, get going with certifying the district and moving forward with it, that authority lapses, and you'll have to come back at some other time after that planning time is over, or the provision for it is over, and come up with another either special request or just deal with it under current TIF law without a special circumstances being required. And I know it was already in some of those provisions, and I really appreciated Alice's drawing that to our attention and working with Scruffa to add that. Appreciate that, Mr. Sylvia. Thank you, Madam Chair.
Thank you, Madam Chair. Any further questions or comments? All right, Mr. Sylvia.
Madam Chair, members, Article 9 of the Conference Committee report contains the Office of the State Auditor's general law TIF changes. No changes was made to this article from when the Conference Committee adopted it last week. This House and Senate had nearly identical language, but the one-word choice and/or was different. The Conference Committee had adopted the Senate language for that, and that is what appears in the Conference Committee report.
Doesn't look like there are any further questions on Article 9. Next up.
Madam Chair, members, I'll just go very briefly through the local sales tax article and the local special taxes article. The local sales taxes article is largely identical to how it came into the committee from the Senate bill. Two changes I will note for two of the authorizations. Initially, the city of St. Paul had an authorization for street improvements. There was some language added here to allow those funds to be used also for bridges. And then, Madam Chair, the Rochester authorization included, as the bill came to conference committee, the option for an additional $10 million to be used for economic development purposes. That piece has been removed here. Two new changes to the local sales tax article. The first is the establishment of a task force to examine the use of local sales taxes as a funding mechanism for capital and other improvement projects. And the second is a 2-year temporary moratorium on local governments from adopting a resolution or disseminating information or seeking voter approval for a new local sales tax or a modification to an existing local sales tax. Madam Chair, as was adopted earlier in the last couple of weeks in conference committee, the local special taxes article includes.
Madam Chair,
Chair Russ, go ahead.
back to the local sales taxes. You did not mention that St. Paul only needs to have one question. I need that confirmed on behalf of the city of St. Paul.
Madam Chair, Senator Rest, yes, I apologize for missing that modification. There is language added to the St. Paul authorization that would allow the city to pose one question that would include both projects. And would require the city to adopt an amended resolution, also to include the bridges in the use of the funds for street improvements. Thank you.
Thank you for the
Senator Rest.
clarification, Madam Chair.
Thank you.
Madam Chair, the local special taxes article includes the two provisions for the city of Duluth to increase the project costs that are funded by their food and beverage and lodging taxes to fund athletic facilities. It includes the extension of the Cook County lodging tax in both the House and Senate bills, and then it authorizes the Lake of the Woods County to impose a lodging tax. And that concludes the local sales and special taxes articles.
Thank you, Ms. Pollock. Are there any further questions or comments on that article? Not seeing any, thank you. We can go to the next one.
Madam Chair, members, Justin Cope, House Research. I'll be walking through Article 12, the Public Finance article. This is the House Public Finance article as it was presented with one change and two additions of provisions that were previously carried elsewhere in the House bill. The changes in Section 1, which allows public funds to be invested in credit union time deposits, that section was modified to correct the reference to the insurer of those deposits from the National Association of Credit Unions to the National Credit Union Administration. Section 15 and 16 were additions to this article that had been carried in the Senate's Public Finance article and the House's miscellaneous article. These are Section 15 extends and expands St. Paul's authority to issue bonds for its capital improvements program, and Section 16 allows the City of Virginia to issue bonds for a public safety building, which would be exempt from the city's net limit. The latter provision is as it was in the Senate bill, which would be effective once the City of Virginia passes a resolution certifying that it approved this change. And that concludes the public finance article.
Any questions or comments? Looks like we're good. We can move on to the next article. Thanks, Mr. Cope.
Madam Chair and members, Article 13 is the stadium e-pull tabs and gambling taxes article. Sections 1, 13, and 14 make conforming changes related to the repeal of the stadium reserve. Section 2 partially repeals and limits the retention of Minneapolis sales tax revenue. Section 16 contains the $15.7 million appropriation for the perimeter fence around US Bank Stadium. Section 17 contains an appropriation to the Commissioner of Management and Budget that is equal to the difference between the stadium reserve balance and the estimated payoff amount. And Section 18 repeals the stadium reserve, eliminating the general fund transfer to the stadium reserve and the annual debt service appropriation.
Ms. Hagler?
Madam Chair, I'm just going to go over the e-pull tab provisions that are contained in this article. So this article makes changes to the e-pull tab and e-bingo device requirements. Section 12, maybe, I think I wrote that down wrong. But there's also a section that provides a cap for e-pull tab developer fees, and that is a new provision, that's section 11. Sections 4 and 12 make changes to the audit requirement to exclude revenue from e-pull tabs from the threshold that triggers an audit. And then section 3 is the reduction to the charitable gambling combined net receipts tax that aligns with the governor's approach. And Madam Chair, sections 5 and 8, nope, sections 5 and 7 are, sections 5, 7, and 9 are as they were in the House approach relating to the e-pull tab changes.
Thank you. Representative Davids?
Thank you, Madam Chair. I woke up this morning and was basically horrified by what I saw on the e-pull tab language. There's a tremendous amount of new language that was never heard in the Senate or the House. For example, on page 309, lines 309.10 to 309.12 seems to have come out of the sky somewhere. And then we go to page 310, 310.26 to 310.28. That is devastating for charitable gaming. And then on page 312, from 312.7, I believe, down to 312.31, that's all new language too. I mean, the Senate had no position. The House had a position that now, believe it or not, actually looks reasonable. And then we come up with this. This is going to shut your charities down. There will be charities going out of business because of this language. This is not acceptable. This bill, of course, other than the highest tax increases in state history, there's a lot of good stuff in this bill. But this language puts a stain on this bill. To do this to our charities, and you can say, well, we're lowering the tax over here. Well, fine. But if the revenues go down 90%, you can lower the tax all you want, and it doesn't make a difference. This needs to be looked at. I know there'll be an amendment coming up about putting the date out. But this is horrifying to my small town local charities. I don't know where this came from. It's certain, I don't know if it's the dark of night in a smoke-filled room with a bunch of high-priced lobbyists. I don't know. I don't know because I've never seen this before. And here it is. We're going to wipe out our charities for what? We should be encouraging our charities, not doing devastating things such as this. So members, before this thing gets closed up, this has to be addressed. And I don't think just going out to December 31st is enough. This is some out there is saying, well, this is the House language. This is not the House language. I pointed out the provisions, 312.7 down to 312.31. That's not House language. And of course, the Senate had no language on this. The devastating part, 310.26 to 310.28. Members, we have to slow down here just a second, and we have to correct this. This can be done very easily. So to go from no language in the Senate to language that I thought was horrible in the House, this makes the House language look great. Because at least the House language doesn't put everybody out of business. This is going to put a lot of small charities out of business. If you want your hands on that, that's up to you. But this is a stain on what should be a pretty darn good tax bill other than massive tax increases to the highest in state history. So we need to do something about this as a conference committee. Thank you, Madam Chair.
Thank you. Senator Weber?
Thank you, Madam Chair. I must agree with Representative Davids. I understand. I am not blaming the chairs of this conference committee. I know this was handed down from up above. But sometimes when people up above hand things down, they don't totally understand the major waves they are creating by throwing this pebble in the pond. This state generates, from our charitable gambling, $131 million. In the last quarter, 54% of that was from the E-tabs. And what does that mean? That means there are thousands and thousands of children across this state that enjoy programs that are provided by these funds. It means that there are thousands and thousands of children that can be involved who otherwise would not be able to afford participation in many of these programs. Representative Lisselgard, is $1.7 million goes out into the charities in your district. What are they going to replace that with? Senator Hochschild, there's $3 million that goes into your district. What are they going to replace that with? You know, this is absolutely reprehensible. On one hand, you want to brag about the child tax credit in here and how it's going to help families. And so you're putting money in one pocket and taking it out with the other, because we have many, many poor families who will not be able to afford to have their children involved in these programs that I think we all believe are worthwhile. This is a shameful provision in this. And I just want to say this. I have went into the gambling, the casinos in this state a couple of times. I do not do it regularly, but I will tell you this today. I will never go through those doors again. And I believe there are thousands of people in this state who frequent those infrequently or, quite frankly, frequently. And once they find out what we are doing to the children of this state by this provision, I don't think they're going to bother going through those doors again either. And of course, I appreciate the fact that you're extending the date by 6 months. But public, just remember this. This isn't out of the goodness of anyone's heart. This is because it takes the start date past the next election. There's a lot more I'd like to say. I will save that for the floor this afternoon. But I would very strongly recommend that the department and the chairs rethink this provision. Thank you, Madam Chair.
Thank you. Is there anyone else who has a question or comment about this section? I'll just say a couple things. This redesign to align the way that e-pull tabs look with our original deal, with the original deal in 2012, will not eliminate e-pull tabs. That is not true. And I will just say that I believe that those who would come and tell us that eliminating, a bonus game or a spinning wheel feature that happens after the gameplay is completed, or those who would come and tell us that requiring 4 touches instead of 1 touch is going to completely eliminate this, established form of gambling, it strains credulity. It doesn't align with reality, in my opinion. So just to clarify, in 2012, when the deal was being made to fund the Vikings Stadium, these e-pull tab games were approved. And when we had our discussion on the floor on our tax bill when it came through, we had a very helpful comment from Representative Mike Nelson, who was there when the deal was cut. And I will tell you what he said. He said the way that these games are designed today is in clear violation of that deal. He was in the room. And so we are, as I said, we are violating longstanding tradition in this state by keeping our word to the sovereign nations with whom this deal was cut. And I understand that, that there are concerns about what this will do to revenue. So between the cut to the net receipts tax that we see in this bill, which doubled since it came in, the cap on distributor fees, the tax bill will cover the equivalent of a 52% decrease in revenue for the charities. There is significant support for charities in this bill. Many gaming organizations will be eligible for a streamlined audit process that will also save them time and money. I think that this is one of those difficult situations where there are people with strong opinions on either side, and we did our best to accommodate those concerns through this cut to the net receipts tax, the limit on these distributor fees, and streamlining the audit process. But I just want to say, it really is hard for me to understand how you could credibly make the argument that changes in design of these things is going to completely eliminate them, is going to make the revenues drop by 90%, is going to put a charity out of business. I understand the consternation around this, but I know that our leadership has made an effort to bring all parties to the table, and this is where we are. And, I will say that I am proud to be part of an institution that's making a bold statement to say, we're going to actually keep our promises. We're going to keep our word. We're not going to continue to clearly violate the deal that was struck in 2012. Representative Davids.
Well, thank you, Madam Chair. And I don't know that anybody said we're eliminating pull tabs. I don't recall anybody saying that. Did I say that? I don't think I said eliminate pull tabs. What I said is that because the revenues are going to be cut, we've already said they're going to decrease 52%. So we know they're going down. In 2012, why did this not raise? I think at one time we had to bring in tobacco money or something to offset some things. Why didn't that generate money? Because it was boring. And now we're going back to boring. So, Madam Chair, your explanation isn't good enough. It's just not good enough. You say leadership has made an effort. It brought all parties in. I'm not aware of that. If that's a correct statement, let me know. I don't think that's a correct statement. They haven't brought all parties in. I know they haven't brought all parties in. So we're not eliminating pull tabs. I understand that. But I've seen some estimates, 80 to 90% reductions. And by our own discussion today, we know it's at least 52% down. 52% down in revenues. Now, you can call me a flip-flopper if you like, because they did flip-flop. I'm very anti-gaming. In fact, Chair Rest and I, back in the old United Methodist days, we would talk about these things, about how gaming is a very, very bad thing. And I believe that. I do not support gaming. I was told the other day, I said, well, I never win any of these lottery things. And they said, well, you got to buy a ticket. And I said, well, I'm not going to buy a ticket. I would never buy a ticket. That's my opinion. Other people do it. They like doing it. So I'm a flip-flopper. I can see my next campaign literature here. Last year, I had a bill to go after the Gambling Control Board for not enforcing the original law. They approved games, the Gambling Control Board approved games that clearly were not legal. So now we come back 11, 12 years later, when this thing has become a huge success, and the Gambling Control Board approved these games. The Gambling Control Board approved these games. The charities have now been very successful in raising money through e-pull tabs, and now we're going to cut their leg off. So you know what I did? I thought, you know what? The state has messed up so bad on this. The Gambling Control Board has messed up so bad on this that, you know what? I'm going to support the charities. That's what I'm going to do. And so that's what I'm doing. And I think everybody around this table should do that too. And this stuff about leadership has done this or that. Well, you know what? At some point, when something is so egregious such as this, you just have to stand up and say, we're not doing it that way. We're taking the Senate position. That was a position that we had before us. Why in the world wouldn't we take the Senate position? I don't know if anybody can explain that to me. So the Gambling Control Board has failed the state miserably. Now, I'm not saying the current Gambling Control Board. I'm saying from 2012 on, when they started approving games, I'm going, well, you can't do that. You can't do that. Well, they allowed it. I think the cat's kind of out of the bag on this one. I think we need to and I did say charities will fail. I'll guarantee you local charities will fail because their income, even if it's cut 52%, they will fail, even with the tax credit. So nobody said, if I did, then I was wrong. That we're not eliminating pull tabs, but we're making them boring like they were in 2012, 2013. Revenues are going to go down much more than 52%. So some little tax credit, or whatever it's called, that doesn't do it. And I can see what's going on. They say, well, yeah, we really ripped off the charities here, but we gave you a tax credit. Well, a tax credit on zero is zero. That's not helping anybody or anything. And I really wish we wouldn't have had to bring the sovereign nations into this discussion. I really wish we didn't have to do that. We didn't have to do that. This is about the charities. This is about closing down charities, closing down boys and girls hockey programs. You just go down the list. That's what we're doing if we don't address this. And I think we had better get the department. I think we had better get the chairs together and take the Senate position. I can't believe I said take the Senate position. Did I say that?
Representative Davids, you are welcome to share your opinion, but you may not misconstrue what I say. I don't know if you misunderstood or you are misrepresenting what I said. Hold on just a moment. I said, I never acknowledged, people have been coming and saying, there's going to be a 20 to 60% decrease in revenue. Now today you're saying, oh, they're saying there's going to be an 80 to 90% decrease in revenue. I have never seen one shred of evidence for any of these numbers. I don't know what they're based on. I keep asking. Nobody can produce literally any information about it besides somebody just saying it, and then people repeat it. What I said, I did not say that there's going to be a 52% decrease in revenue. What I said was that the changes in this bill that are beneficial to charities, the decrease in the rates on the net receipts tax, and the cap on the distributor fees would offset a 52% decrease in revenue. However, anybody saying that there's going to be a 52% decrease in revenue needs to come with some evidence. Anybody saying there's going to be a 60, 80, 90% decrease in revenue because of some modest design changes and making somebody press 3 buttons instead of 1, increasing the playtime from 1 second to 4 seconds. If you want us to believe that, come with some evidence, please. But that's not at all what I said. I did not say that there's going to be a 52% decrease in revenue from these games based on the changes that are proposed here. What I said was that we did what we thought was like a good deal, which is a significant cut to the net receipts tax, a cap on distributor fees, and a streamlining of the audit process. Is there anybody else who has any?
Yes, there is.
Just a moment. Senator Weber.
Thank you, Madam Chair. Well, the reality of it is, until you make a cut, the actual decision, we aren't going to know exactly what those cuts are. But the reality of it is, if you look at the implementation of this program, for the first number of years, they lost money. When it was as Representative David said, the boring way. And it was when those changes were made, I mean, as I understand, and I wasn't here when this was established back in 11, 12, but they were losing money. The state was making plans of a backup account in order to finance what this pull tab income wasn't going to be able to. And then the changes were made, and all of a sudden it took off. All you need to do is look at a history of the proceeds. And so quite frankly, when you take that away, when you take the attractiveness of the changes that were made away from that, yes, you will see a dramatic drop. I can't tell you exactly what that percentage is, but it will be dramatic. And it will force many of our charities out of business. And so, as Representative David said, this has come dropping down from up above. And what has the analysis been? Do we have the director of the gaming board here? I mean, has the Department of Revenue analyzed these numbers?
Are those rhetorical questions?
No, they're actual
Okay.
questions.
Well, I mean, we're chairing this, I'm chairing this committee. I'm not interested in pulling up anybody from the Gambling Control Board at this time. We can ask, did you have a question for the Department of Revenue? We have the commissioner and Joanna here, but.
Well, yes, exactly how much revenue will the state lose from this if we have let's say, for example, a 54% reduction?
Well, as this whole discussion is, you're like in the realm of speculation and hypotheticals. And so like, you're asking numbers people to speculate and operate in the area of hypotheticals. And so they don't have.
Madam Chair, every revenue estimate that comes out is a hypothetical.
Madam Chair.
Representative Davids.
Thank you, Madam Chair, and I apologize to you when you said a 50, other changes made in the bill would take care of a 52% decrease.
That's what I
Not that-
said.
Okay, and I apologize for that. I did misunderstand that. But having this dropped on us now, we are grasping for straws, trying to figure out what the numbers are. Because this was done in the 11th hour, we don't know where we're at. We are flying blind. We are going forward, and we have no clue what the impact of this is. We have no clue. We don't have a number. I mean, let's get a fiscal note. I can't believe we're doing this in the tax committee of all places. This is obscene that we would do and act like this in tax committee. And I think, I was corrected, Madam Chair. I think you need to be corrected on something. You said these are modest changes. These are not modest changes. These are massive changes that we haven't seen before, and we're going to ram them through and shut our charities down. Now, we're not going to eliminate e-pull tabs because we're going to go back to the boring games that nobody buys or does. So the reason we have to say, I was saying a 52% decrease, 80%, 60%, whatever that number is, we don't know. We don't know the damage we're doing to our charities and to our children. We don't know that because of the way this was handled. And like I said, I'm not faulting the chairs. I know one time in 6 years as tax chair, I had a speaker come and tell me what I had to do on something. One time. But this is a massive, destructive effort on our charities. So let's focus it on charities. That's what we're talking about here. And you're right, Madam Chair. We're grasping at numbers. We don't have a clue. We are clueless as to what this is going to do. That's correct. Thank you, Madam Chair.
Thank you. Any further discussion? All right, I guess we're moving on to the next article now. Had to get somebody today, I don't know.
Madam Chair, members, the next article is Article 14, which deals with teacher retirement, normal retirement age. Section 1 increases the amount of general education aid in the education code to offset the increased employer contributions required under the rest of the article. Sections 2, 3, and 4 all deal with the Teachers Retirement Association. Section 2 modifies the normal retirement age to mean age 65. Section 3 increases the required employee contribution, and Section 4 increases the required employer contribution. Sections 5, 6, and 7 all deal with St. Paul teachers. And again, in the same pattern, Section 5 decreases the normal retirement age to mean age 65. 6 increases the required employee contribution by 0.25%, and Section 7 increases the required employer contribution by 0.75%. Section 8 moves the statutorily established date for full funding for the Teachers Retirement Association Pension Fund from 2048 to 2053. And finally, Section 9 is a base adjustment for the agencies that employ members of the Teachers Retirement Association, and the amounts represent the increased, estimated increased required employer contributions for those employees. That concludes the Article 14, teacher retirement.
Thank you. Are there any questions or comments on this article? All right, thank you. I lost my sheets.
The next article, Madam Chair, is a miscellaneous article. I'll just speak generally about the provisions in the article and then draw members' attention to the provisions that had not been in either the House or Senate bill. There are provisions related to the Tax Expenditure Review Commission, the taxpayer receipt, revenue recapture items, language regarding tribal tax agreements, the language regarding the DOR payment agreement fee, language regarding service of petitions, rate on delinquent taxes, the allocation of the solid waste management tax, a range of sections establishing tourism improvement districts, some language from the House bill regarding workforce and affordable homeownership development programming, the Ramsey County period of redemption, and various local grants that the fiscal analysts and the committee has already discussed. I'll just draw members' attention to a few sections that had not been in either the House or Senate bill. The first of those is Section 24. This is the tax filing modernization account that the Commissioner described in our previous conference committee hearing. Section 26 has been mentioned today. This is the section that would require grants funded by an appropriation in this act to be subject to the financial review requirements established in the state government bill, House File 1830. Sections 29 and 30 are, 29, 30, 33, and 34 are the grants to the Crane Lake Water and Sanitary District, the Minneapolis grants that the committee discussed earlier, and the grants to the city and school district in Windham. That is a quick summary of the miscellaneous article, Madam Chair.
Thank you, Mr. Arneson. Are there any questions or comments on the miscellaneous article? Not seeing any. I think we can move forward.
The remaining articles are the Department of Revenue Policy technical articles that are undoubtedly well known to the committee members. They are identical as presented in committee earlier, except that provisions that would have been in conflict with a substantive provision adopted earlier in the bill, in the income article, for example, were removed from the technical articles in favor of the provision in the income article. And then there was one provision carried in the police and fire aids article regarding the calculation available, the amount available for apportionment under those programs. And the change there is just to add a reference to the short line credit established earlier in this bill. They're otherwise identical to the version presented earlier. And that concludes the report.
Thank you, Mr. Arneson. Are there any questions or comments on those last sections? All right, not seeing any. That concludes the nonpartisan staff's walkthrough of the conference committee report. Senator Ress, would you like to move adoption of the House File 1938 Tax Conference Committee report, which is the revisor document coded CCR HF 1938? And then we can take questions and discussion.
Certainly, Madam Chair, I will do that. When is the appropriate time to introduce amendments? shall I make the motion to adopt it, and then I'll make motions for the, that's my plan, if that's agreeable.
Yes, that sounds
Okay.
right.
So, Madam Chair, I move that the conference committee report, the document HF 1938 CCR is dated 5/19/23 be adopted.
Excellent. So the rest motion is before us. Is there any questions or discussion on the motion? Not seeing any, maybe we can do the amendments?
Madam Chair, this amendment has been discussed already, but it is on page 315, line 3, to delete July 1 and insert December 31. This is the moving the effective date in the full tabs language in, I don't remember the article number, but it's on page 315. I think everyone is familiar with it, and so that is my motion.
All
Madam
right.
Chair.
Yes, Representative Davids.
Thank you, Madam Chair, and thank you very much, Senator Rest, for this amendment. This helps a little, but it doesn't address what this body still needs to do, and that is to go to the Senate language on this provision. But I certainly support your amendment, Senator Rest, and I thank you for it.
Sure.
Thank you. Is there any further discussion to Chair Rest's amendment? Seeing none, all those in favor, please signify by saying aye. Aye. Any opposed, please say no. Motion carries, and the amendment is adopted.
Madam Chair.
Yes, Senator Rest.
I also would like to make a motion that we adopt the effective dates for the, to align with the spreadsheet with regard to those provisions that I discussed earlier. I think that's pretty clear. It's about sunsets and so forth, and to make those changes in the document reflect the changes on the spreadsheet with regard to those items. That's my motion.
Oh, sorry. Is there any conversation or questions or discussion on Chair Rest's motion? Seeing none, all those in favor, please say aye. Aye. Any opposed, please say no. Motion carries, and the amendment is adopted.
Madam Chair?
Yes, Senator Rest.
I'm not aware of any other recommendations for amendments to the document coming that are technical.
Ms. Pollack? No, you're okay. Ms. Pollack.
Madam Chair and members, there is one other change to an effective date that's missing in Article 1, so it does not pertain to the two credits that you mentioned, and so a technical amendment would be to include that effective date, which is reflected on the spreadsheet. I am not aware at this time of any other technical amendments.
And that, Madam Chair, and that
Yes.
third one is regarding what subject?
Ms. Pollack.
Madam Chair, the PTE tax. The PTE
The
tax?
PTE, okay. Okay, so that's my motion with regard to that.
All right, so
We've done that.
adopting this date. Okay, so Senator Rest
Did
has.
my other motion in terms of that, changing the effective dates to reflect the spreadsheet, take care of the issue that Ms. Pollack just brought up? Is the answer
I guess I
yes?
would ask for an opinion, Ms. Pollack, if you think that, or Mr. Williams?
Chair Gomez and Senator Rest, so the effective date that we're changing is in Section 17 of Article 1. So we just want to make that effective for tax year 2023. And in the article as it's presented, there is no effective date.
Thank you, Mr. Williams. All right, so Senator Rest has moved that change. Is there any discussion on that motion? Seeing none, all those in favor, please say aye. Aye. Any opposed, please say no. Motion carries, and that change is adopted. Chair Rest, there aren't any further amendments, or are there?
Not for me.
Oh, okay.
Ma-
So,
Madam Chair?
yes.
When it's appropriate, I'd respectfully ask for roll call
okay.
on the bill
sounds-
itself
on the
as
bill?
amended.
Absolutely. So a roll call's been requested, so we will do a roll call. And just, so as we move this, we also want to direct nonpartisan staff to make any technical changes to make the spreadsheet and the language align and any other things that come up, because we know you guys have been working through the night, and you know, we appreciate it if any periods or commas were missed, if we'll just improve those. So, Senator Rest's motion to adopt the House File 1938 Tax Conference Committee report as amended is before us, along with those technical changes. Is there any further discussion on the motion? Not seeing any. There you are. Okay, Ms. Prevette will take the roll.
Representative Gomez. Representative Gomez.
Aye.
Representative Gomez, aye. Representative Listagard.
Aye.
Representative Listagard, aye. Representative Lee. Aye. Representative Lee, aye. Representative Agbaje. Aye. Representative Agbaje, aye. Representative Davids.
No.
Representative Davids, no. Senator Rest.
Yes.
Senator Rest, aye. Senator Klein.
Yes.
Senator Klein, aye. Senator Weber.
No.
Senator Weber, no. Senator Dibble.
Yes.
Senator Dibble, aye. Senator Housechild.
Yes.
Senator Housechild, aye. Madam Chair, there are 8 ayes and 2 nays.
On a vote of 4 ayes and 1 nays of the House and 4 ayes and 1 nays of the Senate, the motion prevails, and the Conference Committee report for House File 1938, as amended, coded CCR HF 1938, is adopted. All right, thanks, everyone. Now, we're just going to hang around for a few more minutes and get some closing comments. I'll just go first to Commissioner Marquardt.
Well, thank you very much, Madam Chair. And first of all, a big thank you for allowing the Department of Revenue, myself, and Legislative Director Bears to be part of these discussions. And I have to say, I've been watching conference committees over about the last 10 years, and before that, of course, but in the last 10 years, it's been different. This was really refreshing to see the public offers go back and forth. If you're out there in the public, this was good governance. You could see the proposals that are being brought forth from each side, and I think that was real positive and something that I haven't seen actually here probably for about the last 10 years. On behalf of the governor, Governor Walz and Lieutenant Governor Flanagan, thank you for sharing their priorities and including many items into this bill. This is a wonderful bill. It's going to change people's lives. It's going to move the dial. And that's what hopefully tax bills can do, and it absolutely does this. I've talked about the child tax credit, so I won't talk any further about that. But thank you so much for including the governor's one-time rebate. That rebate is $260 for single filer, $520 for married, and $260 up to 3 dependents. That $1,300 maximum credit will be the 5th highest maximum credit of states in the last year or so who have done rebates. And it's, as Governor Walz has said many times, this will help ease the pain of inflation. And it's going to help pay for groceries and rent and those type of things that people need on an everyday basis. Another big part of this was the public safety aid. Thank you so much for that. That will help provide valuable resources to our communities for public safety. And, you know, one of the major goals for the governor is to make sure that we have equity in our tax code. And we have to make sure that everyone, no matter who you are or where you live, have the opportunity to succeed in our tax code. And the child tax credit, the renter's rebate, moving that to the income tax, including I-10 filers for the working family credit and the homestead credit state refund. All of those go a long way in increasing tax equity. And if we can make sure that a tax bill can lift everyone up like this one does, no matter who you are, where you live, the state of Minnesota is going to be stronger and better. And so, again, this tax bill is a wonderful bill. It moves us towards Governor Walz and Lieutenant Governor Flanagan's vision of making sure the state of Minnesota is the best state in the nation for kids and families. So Madam Chair Gomez, Madam Chair Rest, committee members, staffs who have done just a wonderful job, and I'm going to also not only House and Senate, but the Department of Revenue staff that have all worked so hard. Thank you for putting together a bill, a product that's going to make a difference in people's lives for the better. Thank you very much.
Thank you very much, Commissioner Marquardt. Does anybody else want to say anything before we go to Chair Rest for some closing comments? Representative Davids, or do you want to?
I was just going to say, I
Chair
would like
Rest.
to speak after
Yeah.
Senator Weber, if you don't mind.
Yes. Representative Davids.
And thank you very much, Madam Chair, and I'd like to thank Senator Rest. I'd definitely like to thank Chair Gomez for what, until this morning, I would call an open process and very transparent. I thank you for that. That's good. We did get blindsided this morning on something that's going to be very damaging to veterans, children, and the poor. But up until this morning, it was an open process, and I thank you for that. I really want to thank the staff we have. I call them the A-team. The Senate has an A-team, the House has an A-team. Thank you so much. I think the department's been great to work with, Commissioner Marquardt and Ms. Bears. One question, just briefly here for the chairs, is will there be an incidence analysis on this tax bill so we can kind of see what's going on here? Will you be requesting an incident? Yeah, the questions to both chairs.
Chair Rest.
Madam Chair, Representative Davis, I'm not sure exactly what you mean. You mean
Well-
Representative Davids?
where excuse me, Madam Chair, where the burdens are going to fall
Well,
here?
basically, kind of like a tax incident study on what this tax bill does. I know there'll be one down the road, but could we possibly request one
Understand.
earlier?
Madam Chair, to me, that's a question for department. Is it the custom that you do an incidents report, which is, that always means who bears the burden, who gets the, we like to think of who gets the benefits as well, but who bears the burden. And I know we have that generally. It alternates between the tax expenditure report and the tax incident study. But it would be a specific requirement or request. I think we'd all be interested, but I don't know what the schedule is for the department. And I wonder if Commissioner Marquardt has any comment on his request.
Yeah, Commissioner Marquardt. Thank you.
Thank you very much, Madam Chair. And certainly, we have the tax incident report that comes out every 2 years that certainly would include this legislation, but certainly the Revenue Department also can do an incident
Is that due
report
out?
on this bill.
Excuse me.
Yes.
And thank you, Madam Chair, and thank you, Commissioner, and thank you, Chair Rest. What I'm looking for here is not just this tax bill, but also the taxes that are in education and housing and all the different committees that we bring it together just to see, and I agree with totally with Senator Rest, who benefits? I think we need to know that too. So if there could be an incidence analysis, that'd be very great. Thank you.
Thank you. Chair Rest.
I can't definitively say yes, in the sense that we have a schedule for the tax incident study and what it includes, but I would think that there is certainly research folks that can analyze each major bill within their jurisdiction, I guess, is where I would direct them. However, as we know, we have increased revenues coming in from more than one committee and more than just the tax committee. But I think we all want to see that. I just don't know the mechanics of getting that going, Madam Chair, Representative.
And
Thank you,
thank you, Chair
Representative
Gomez. And
Davids.
from what I understand, the chairs can request that of the department. I do believe that's in current statute.
Okay, I request it.
Done and done. All right, we're getting
I'll have
getting the people's
Mr. Williams
business
get it
done
to you. Thanks, Chair Gomez.
Thank you, Representative Davids. Senator Weber.
Thank you, Madam Chair. Certainly, I wish to thank the staff as well. I appreciate all of the efforts that you make. They're always there when I have a question, and they are truly indispensable to us as a committee. And I thank Senator Rest for the inclusion that she has shown to me as a minority lead, not only for the conference committee, but for the entire year that we've had hearings. And I appreciate many of the provisions that are in this bill. And, you know, at the end of the day, there are a lot of good things, as Representative David said, that are included in this bill. And yet, here we have, with a $19 billion surplus, now $17.5 billion due to an accounting change, we have tax increases, not only in this bill, but across the entire budget stream this year. When is enough enough? I was interviewed the other day. I made the statement, well, we all know Democrats have never seen a tax increase they didn't like. And that is true once more. And this was, I think, as transparent a process as any conference committee has had this year. But Representative Davids is right. This provision that showed up this morning gives a true shiner to this report and to this process. And that is enough for us to be ashamed of, in my opinion. And so I will, as many good things as in this bill, due to the tax increases, due to this last provision that was added, I will not be able to support this bill on the floor. But again, I thank you for the courtesies and respect that has been shown, and look forward to meeting with you all again someday.
Thank you, Senator Weber. Is there anyone else who wants to have any comments before we go to the chair? All right, Chair Rest.
Thank you, Madam Chair. We definitely do owe a debt of gratitude for our staff, and I want to thank the contributions of the House Research staff, the House Committee Legislative Assistants, Laura Sabies, Faith Privet, Mr. McQuillan, and the House Conferees, Davids, Agpadje, and Lee, Chair Leslie Gard, Chair Gomez, and also your Vice Chair, Representative Morris. We have done 2 advisors to the Senate conferees, Senator Putnam and the former chair of the Senate Tax Committee, Senator Nelson, Senator Dibble, and House Child Minority Leader Weber, and Vice Chair Klein. We want to thank our legislative assistants, Hunter Peterson, Tyler Klein, and the Republican and DFL researchers, Dan Mickelberg and Krista Broughton, my LA, Christy Blood, my administrator, Mitch Berggren, and certainly Joanna Bears and the commissioner have enjoyed our many conversations about tax policy. And then finally, and most especially, our Senate Counsel Nora Pollock, Eric Sylvia, Casey Munn, and Bjorn Arneson. I, to celebrate this bill, I think that we have managed in the provisions of the benefits to focus once again on children and families across this state. I am convinced that every family, every person in my neighborhoods in New Hope are going to benefit by the action on this tax bill. I look at the work that you mentioned to start with on the working family credit from years ago to now a nationally renowned, I believe, child tax credit that so many of our families are going to enjoy. We did some structural change that also brings a great benefit to Minnesota families in making and adopting the changes in the renter's credit. I think that's another policy change that we took the moment to do it now with the monies from the surplus and the revenue raisers. We were able to do that child tax credit. We were able to do a significant rebate. Important in our caucus especially, the public safety aid, which was carried at zero in the House, but graciously over the days that this conference committee was meeting, they were able to come to our number on the public safety aid, and we greatly appreciate that. And I think the cities and the counties in Minnesota are going to appreciate that too in the next, using that money in the next year. I was pleased that the Senate was able to move toward the House on LGA, general aid to cities, and also in CPA. I continue to be interested in the additional aid program, not one time. I have a lot of questions about one-time money, but the tribal aid is a programmatic aid going forward. I certainly think that the policy that we are endorsing with low-income housing with 4D and the additional provision in that program and being able to have an ongoing lowered rate. And even though we're going to take we're going to pause on the local sales taxes and really, I think, take a look at what role local sales taxes play, and there's nothing optional about them, but once they're there, there's no option. They are imposed. But to take a serious look at what role local sales taxes plays in the life of the city and its economic development, and not ignore that impact on their ability to provide necessities in their cities and amenities. So I'm happy to have worked with the House conferees and Senator and Representative Gomez, and I certainly only both here and on the floor of the Senate will urge a green vote.
Thank you so much for that, Madam Chair. Yeah, I too am really proud of this bill that we've put together in partnership with the House and the Senate and the Department of Revenue and the Governor's Office. I didn't thank Commissioner Marquardt and Joanna on my second to last speech, and when I went to bed, I was like, oh no, I forgot to say, but you guys have just, been instrumental in getting this bill done. You have been wonderful partners to both the House and the Senate, and I think in these last days, I don't know how many times you've run around the Capitol complex to sort of help us get the last minute things done, and we just really, really appreciate that. We know that it hasn't been easy, but we have gotten it done together, and I'm really thankful for you. And Ms. Pollack reminded me, every bill, every line of this spreadsheet, probably the staff at the Department of Revenue did, 4 to 20 revenue estimates on them. I see Mr. Willett is here with us and his tax research team, and we know that the attorneys at the Department of Revenue have been working around the clock, and we are deeply grateful to them. They are sort of the, they're kind of the subject matter experts behind the scenes who make all the numbers work, and so we just really deeply appreciate that. We know that everybody around this table has been working super hard the last few days. And, to Chairless Lagarde, my partner, my new work spouse as of this session, we've talked about this on the floor. I feel like how many nice speeches have we given about each other at this point? But, we talk about the South Side, which is where I'm from, and the Iron Range, where he's from. And we're both really proud of where we're from, and we're proud of the people that we're here to work for. And, there probably aren't two more different members in our caucus than Chair Lissagard and I, and it was sort of the genius of Melissa Hortman to be like, well, Gomez and Lissagard can agree on a tax bill. Probably everybody in between them will be okay with it. But, I think that, I think about the commonalities between our districts, and, sort of one of the lenses that I bring to this work, obviously, is around economic inequality and what this economy is like for working class people and their families, and middle class people and their families. And we know that certainly over my lifetime, as I have kind of observed economic trends, the gap between the rich and the poor just continues to grow and grow and grow. And what that means is that we are letting children in Minnesota live in poverty, that we're accepting those conditions, and those are policy choices. We know that we are making the choice to allow, for example, our contribution to the activities of local governments to go down and down and down. And those are choices that have economic impacts, not just on our cities and counties' bottom line, but on the economies of our residents. And, so we are making bold moves on those issues in this bill. I'm so proud of the child tax credit. Of course, it's going to cut child poverty by 1/3. I'm proud of our property tax division report, which somehow I think got even bigger in this bill. I don't know how that happened. No. But, that there's a lot of wonderful things in this bill. And this issue around tax equity and tax fairness and evening the playing field and ensuring that low-income people can make a way in this world and can make a way in our state will remain, something that we are deeply committed to. And I know that we share that. Conferees, Representatives Agbadje and Lee, Minority Lead Davids, Vice Chair Norris, thank you so much. Thank you for being with us through this whole process. Of course, our House Research A-team agreed. Sean Williams and Chris Klayman and Alex Hagler and Justin Cope and Jared Swanson and our fiscal team, Kathy Schill and Cynthia Templin. Endless gratitude to you all. I could never express it, so I just really appreciate everything that you all have done, and hopefully, like tomorrow, we can all sleep. Our revisors, Maureen Sandy and Evan Powell, who we have some folks pinch hitting for them, but they've been working on this bill for months. Ryan Inman and Cherie Spear and Jason Keenley, who stepped up to help us out. We really appreciate the revisor's office. We know that they have, again, like tax research, they're sort of a hidden but foundational role in getting a document like this put together. To our partisan researchers, Kelly Cavanati and Sean Haydorn, thank you so much. Thank you for being there for our members and all the ways that you're there for our members. And to our CLAs, Faith Prevette and Lauren Sabis, thank you, thank you. Yeah, so we're going to end it there. We're going to have further conversation on the floor. I said this when we met, I believe, on Wednesday, but I do just want to thank Chair Rest again for this process. I think it's been really good for us. As the commissioner said, it's the transparency and kind of lifting the lid on what is often a process that is hard to understand and happens behind closed doors, I just think has been really wonderful, and my deep appreciation goes to you and to all of your conferees, including Senator Nelson, who I see in the back there. So thank you so much. We're going to move on to the floor today, and Patrick McQuillan. Thank you so much. He's been. I know that Patrick and Mitch both play this kind of role of like Bill Sherpa, personal support team for the chairs and the members, and I hope that you guys get some rest soon too, because you've certainly earned it. So, all right. Thank you so much. This is our last meeting, and with that, we are adjourned.